Hey everybody, welcome back to the Economic Analyst channel. So to recap on what's going on in the current markets, despite seeing record high inflation, the highest price inflation annual growth rates that we have seen in over 30 years in the U.S. markets, and the looming likelihood of a contraction in the U.S. economy, we are seeing a strong rally in the U.S. dollar as the dollar index has rallied compared to other major currencies such as the euro, the yuan, the yen, and the British pound by over 15% in the last year. And this is having some peculiar effects on the market. One of them is that it's causing a deterioration in commodity prices measured by the Commodity Index Tracking Fund that I have here on this channel right now. The other thing that it's doing is that it's depressing precious metals prices and will likely continue to have them depressed over the next year or so, or at least until this dollar index flushes out and we start seeing a restabilization of other currencies. But to keep in note here, I want you to take a look that the price has dropped in US dollars for precious metals and commodities, but that does not mean that the value of such things has deteriorated. In reality, it's that the dollar has strengthened compared to those commodities, not that the commodities values are dropping. So when we take a look at the euro and change the currency to euro, we've seen that gold has appreciated in terms of euro, which shows that gold is retaining its value. It's just that the dollar is rallying so strong, and ultimately this is really unpredictable right now. There's no real telling when we're going to see this correction in the dollar index, but this is something I have been noting on my gold valuation model, and it's one of the reasons why I expect gold to remain relatively tame and probably stay under $2,000 an ounce for the next year or so. I started picking up on this. This is silver's chart, by the way, and it shows here why silver is deteriorating in price. But I started picking up on this about a month or two ago, and I've always been someone that's been very bullish on precious metals, but based off of this strong dollar rally, it's just likely that we're not going to see that rally in precious metals till we see this correction in the dollar. And a lot of this is psychological forces at play, probably even more so than economic forces. I think the two major factors are that there's a flock from foreign currencies to the U.S. dollar-denominated assets because of A, the war between Russia and Ukraine that would explain the deterioration of the euro to actually come to parity with the U.S. dollar, and B, the deteriorating global economic outlook. So Japan recently is seeing a huge capital flight out of their currency, and this is probably running into U.S. dollar-denominated assets, probably because the economic situation is deteriorating in Japan, which has been very dependent on export strength, and we're probably because of the dropping demand in the wake of rising inflation, we're seeing the corrections in those currencies, but it's having the consequence, the side effect of strengthening the U.S. dollar and killing the gold markets and silver markets in terms of U.S. dollars. One way to look at this, though, is to say that, because there's this flight to U.S. dollars, this is making precious metals put on discount price for Americans in terms of dollars. So precious metals are basically on a fire sale right now because the international investors are making the wrong play to the wrong safe haven. They're buying dollar-denominated assets instead of precious metals-denominated assets, and because of that, the misplay here is that they're giving the value and the capital to the U.S. Americans, and therefore Americans can now purchase precious metals at a relatively cheaper price than their international counterparts. And then when we have that correction in the U.S. dollar, the value of those precious metals will climb, leading to the resumption of that gold and silver bull market that I have been predicting for the past year or so. When's that going to take place? Probably when the U.S. economy completely craters in the next year, when the credit bubble bursts, give or take, depending on how high the Federal Reserve raises their interest rates and how fast they raise those rates. So, ironically, in my gold and silver forecast, I actually contained that the dollar index would rally. But I was just using the basic historic momentum. This by no means is predictive. I have found no way to accurately forecast the strength of the dollar compared to other currencies. Again, my sole belief is that there's a lot more psychological factors at play than there are just economic value fundamentals. and it's probably going to be nearly impossible to calculate. The other thing that this is having is that because it's depressing commodity prices, we're probably going to be seeing tamer producer price index numbers in the coming months. And I do expect it to start sometime in June, when June's producer price index come out later on this week, but if not, probably in July. And these relatively tamer numbers are going to feed into lower consumer price index inflation numbers in the coming months. Why? Because as I've noted before on this channel, the producer price index for commodities represents your material expenses that businesses incur, and when you factor that in with median wages and average the two together into one index, it correlates very strongly with the CPI. In other words, the consumer price index is nothing more than an average of the producer price index for all commodities and median wage growth indexed together over time. So I expect that the CPI will start calming down in month-over-month change rates, yet because of base effects of relatively low inflation rates last year, we will likely see the CPI still pop off at 9% or higher on an annual growth rate later on this year before finally calming down. But if you've been listening to my previous videos, I have been entertaining the possibility, and I would say it was probably even more of a probability, that we would see the CPI inflation rate ramp up to over 10.5% just from the sheer momentum based off of how much money had been coming out into the economy. Now I no longer think so. Why? This very, very powerful rally in the US dollar is throwing the monkey wrench into my little forecasting engine there. So there's really no way that I could have forecasted this or predicted this, and yet, ironically, it's happening despite the fact that the US economy is still in the doldrum, probably because the US economy is still the cleanest shirt in the dirty hamper. Investors are flocking to it, at least temporarily from now. When that will correct, I don't really know, but I expect the correction to transpire sooner or later, and if there's any kind of trigger for it, it's when the U.S. economy craters from its massive debts as it becomes more burdened from higher interest rates at those debt levels to GDP. Looking at the final demand model, which has been very predictive at predicting the next month's CPI inflation, the final demand model is pointing to CPI inflation being 0.7% next month, annual change 8.4%. When I've done my little manual check on price inflation, factoring in higher energy prices from the record rise in gas prices in the first half of June, as well as the trend analysis on food and core price inflation, which does take into account the shelter component, I'm actually doing a back-of-the-hand calculation looking at a 0.9% increase, which is largely in line with the final demand model. So there shouldn't be any surprises on the final demand model. If anything, the final demand model is predicting price inflation a little tamer than what is likely going to come out in the CPI report. So the CPI report will probably come out a little bit hotter than 0.7%. My expectations is probably between 0.7 and 1%. We'll see how that transpires, but that conforms with my narrative that peak inflation has not occurred yet. It's still yet to come. Yet, because of the relative strength of the US dollar, peak inflation is going to come, in my outlook, a little bit sooner than I think it's going to be. When's that going to happen? Probably late third quarter, early fourth quarter of this year instead of end of the year this year. And we'll probably see price inflation start to slowly tamper down toward the end of this year and carrying on into 2023. So I will be posting updates in the coming days when the consumer price index numbers come out and when the producer price index numbers come out. Stay tuned for that, but this is my outlook that I am right now. So to recap, we're probably going to be seeing close to 1% price inflation, 0.7 to 1% for the CPI next month. This will most likely be in the ballpark of what we see when it comes out. And then the second part is to see if we're going to see the relative calm in producer price commodity numbers. If we start seeing those two things transpire, that would indicate that my analysis and outlook on things is largely correct. So we'll see how that transpires in the coming days. Guys, as always, I thank you for watching this video. If you'd like to, please show me some support. Like the video, subscribe to my channel if you haven't already, and as always, click that notification bell so you're notified whenever I do upload a new video. And again, I'll probably be uploading 2 more later on this week when the economic data comes out. Until then, I'll talk to you next time.